Hey everyone! If you're an investor looking to save thousands to millions on taxes, then you need to know about 1031 exchanges. Trust me, this is a game changer in the world of real estate investment. By the end of this video, you'll understand how a 1031 exchange works and how it can help you save big bucks. So let's dive in. First, let's break down what a 1031 exchange is. Named after Section 1031 of the U.S. Internal Revenue Code, it's a tax-deferred exchange that allows you to sell an investment property and reinvest the proceeds into a new property without paying capital gains tax on the sale. Essentially, you're deferring those taxes until you eventually sell the replacement property. Now, why is this a big deal for investors? Well, capital gains taxes can be as high as 20%, not to mention state taxes that can pile on even more. By using a 1031 exchange, you can defer paying these taxes, freeing up more capital to invest in better or more properties. This means more growth potential for your investment portfolio. So, how does it work? There are a few critical steps to follow. First, you need to identify the property you want to sell, known as the relinquished property. Once it's sold, you have 45 days to identify potential replacement properties. And here's a tip. Always identify more than one replacement property, just in case something falls through. Next, you have 180 days from the sale of the relinquished property to close on one of the replacement properties. This timeline is strict, so make sure you have everything lined up to meet these deadlines. But wait, there's more. To qualify for a 1031 exchange, both the relinquished and replacement properties must be like-kind. This doesn't mean they have to be identical, but they must be of the same nature or character. For example, you can exchange a rental property for another rental property, or a commercial building for another commercial building. And here's an insider tip. Always use a qualified intermediary. This is a neutral third party who holds the proceeds from the sale of the relinquished property and facilitates the purchase of the replacement property. By doing this, you ensure the transaction meets IRS rules and you don't accidentally disqualify your exchange. So why haven't you been doing this already? A 1031 exchange can keep your money working for you instead of handing it over to Uncle Sam. It's a smart strategy for building and preserving wealth. Remember, always consult with a tax advisor or real estate professional before diving into a 1031 exchange. They can help you navigate the rules and ensure you're making the most of this powerful tool. Thanks for watching. If you found this video helpful, make sure to like, subscribe, and hit that bell icon so you never miss another tip on building your investment portfolio. Until next time, keep investing wisely.